focused on the future. In our Future Fund series, it's replaced stock of the day for now. Let's start with you, Luke. So these are companies, something, I know you've got kids, so that you could buy now that you think in years to come might help pay for those exy uni fees, no doubt, that are on tap.
Yeah, look, I picked Nintendo, and I actually came at this in two different ways. One is obviously you want an investment that's around in 20 years, and this is a business that is 100 years old, so I dare say it will be around in another 20. From a stock point of view, I like the business. We all know Nintendo. It's maybe other than Disney, got some of the best intellectual property in the world. Looking for new ways to monetize that in mobile gaming and things like that. So I really like it from that point of view. But the other angle I came across is that proverb of give a man a fish, you feed him for a day, teach a man to fish, you feed him for a life. I've butchered that to all the philosophers out there, but bear with me. Of trying to pick something that the kids would also be interested in, in those maybe 10 to 14, 15 ages. You can sort of explain to them, why you've invested in that stock. They can sort of see the appeal of something that they might be attracted to. I know certainly my kids would be, and even me myself, Nadine, I am a gamer still, I must confess. So I picked Nintendo. I think it's a good business, obviously on the Tokyo Exchange, but there's also an American ADR listing as well. So it's pretty easy to be accessed by even retail investors.
Yeah, right. Well, that's a good take on this stock series. Julia, how about you? What would you think would be a very quality long-term holding that will appreciate, obviously, in price and value?
Well, I know this one's not going to go down well with the punters, but I think when you're looking at the long term, it's less about just picking one stock and more about letting time do the work for you. And when you're investing for someone young and you've got such a long time frame ahead of you, the power of compounding is the key. So you want, I think, a basket of stocks that are just going to increase over time. I mean, to give you an idea, if you invest $10,000 now, you manage to get 8% a year steadily. In 10 years' time, that's over $20,000. But in 20 years' time, that's around $50,000. And in 50 years' time, well, that's more than $500,000. So you can see that compounding impact is really the power of investing. So it's less, I think, to do with choosing the right one stock and more to do with choosing a portfolio of stocks or maybe even an index approach, because it is about those stocks being around for the long term. I call the holy trinity on the Aussie share market, BHP Billiton, Macquarie, as well as CSL. And look, there are different drivers there, and what you want with that diversification is stocks that don't always move together. So CSL is defensive, playing into that theme of the aging population in the healthcare space. BHP is all about global growth, and Macquarie sort of walks to its own beat most of the time. So looking at a diversified approach and really using compounding, because when you have time, it's compounding that does the work for you.
Julia, you're bending the rules, I think, but I'll let you get away with it. The Holy Trinity from Julia Lee. And I'm sure your kids already know the lessons around the power of compounding, Julia, if I know you at all. All right. Thanks, guys.
My
Thanks.
kids have just learnt about supply chain disruption. They've done their Santa letters because they know that Santa needs parts from all over the world, and shipping rates have gone up and are a bit slow at the moment. So they've put their list in as of yesterday.
That's awesome. I feel like your kids are one of the few that will suffer once they go back to in-class learning, Julia.